Welcome to the Planet MicroCap Showcase Virtual 2022. I'm your host, Robert Kraft, and thank you all for joining us today. I'd like to introduce our next panel here at our event. This panel is titled Getting a Competitive Edge with the Right Advisors. Moderating today's panel is Anna Adelstein from PULLP. And we'd like to thank all of our sponsors who are participating at our event, especially for this panel, which includes Coral Capital Advisors, B. Riley Securities, as well as Socialsuite. So with that, Anna, take it away.
I'm Anna Adelstein. I'll be the moderator today. I am a partner and the director of litigation at PULLP, which is a securities law firm focused predominantly on the microcap space. I personally represent issuers and funds in disputes involving securities transactions, SEC and FINRA enforcement actions, and really all other commercial disputes that crop up when you're running a business or a fund. I work with other attorneys and advisors in the field to provide the best possible results for my clients. And as a litigator, I mainly interact with clients when a problem already exists. But today we're going to be talking about ways that companies can integrate creative strategies into their businesses to provide them with a competitive edge in the industry, maximize their investor base, and strengthen their companies so to protect them from the types of issues that I mentioned earlier. So with that, I will introduce our panel. You guys can give a little wave when I say your name. This is Becky Popoff. Becky serves as the director for B. Riley Securities within its Capital Markets Advisory Group, where she leads the firm's OTC advisory practice. Becky works with international companies to establish secondary trading on OTC markets, Trading's platform. Leveraging her deep OTC markets and microcap experience, she has worked with over 300 companies to establish successful trading. Next, we have Erik Nelson. Erik is a co-founder and president of Coral Capital Advisors, which was founded in 1995. Coral Capital provides a variety of services, including business plan management, financial modeling, SEC compliance, interim management assistance, and Erik is also the president of Mountain Share Transfer, an SEC-registered stock transfer agent. Additionally, Erik manages Coral Investment Partners, LP, a fund that focuses on cleaning up public companies for reverse mergers. The fund had 2 of its portfolio companies uplist to the NASDAQ this fall. Olujimi Akindele, Jimmy, is the director of the ESG advisory practice at my firm, PULLP. PULP's ESG advisory practice helps companies navigate the legal and business ramifications of developing, reporting, and implementing ESG initiatives. They advise on matters such as sustainability, stakeholder engagement, corporate governance and social responsibility, crisis management, diversity, and inclusion. When appropriate, PULLP makes use of partnering relationships with environmental consultants and stakeholder engagement firms. PULLP advises microcap clients on their ESG-related risks, initiatives, and goals, as well as ESG and impact investment-focused funds and fund sponsors. Finally, Seth Forman. Seth is the president of ESG at Socialsuite, based in New York City. A seasoned, strategic, data-driven SaaS technology leader, Seth is responsible for the global commercial team, driving business growth and advancing the company's product offerings to help organizations track, measure, and disclose ESG. Prior to his work at Socialsuite, Seth spent 5 years at as global managing director at Quantcast, a global online measuring and advertising technology company, where he led and grew AI SaaS audience platform. And before that, Seth spent 6 years in business development roles at Travelzoo, a publicly traded media publisher. Seth earned his BS in business administration from Syracuse, and he's a frequent speaker at conferences about sustainability and ESG topics. He lives in Westchester, New York, with his wife and 3 sons. So to start us off today with our questions, I think it makes the most sense to speak about what it takes to get onto the OTC in the first place. And with that, I'm going to kick it off with Becky. Becky, can you tell us a little bit about B. Riley's OTC advisory practice?
Of course. Thank you so much, Anna. It's so great to be a part of today's panel, and thank you, Bobby, as always, for having me. We are a huge supporter of SNN events and just honored to be sponsoring yet again. So as Anna mentioned, I'm Becky Popoff, and I'm a director with B. Riley Securities. And I work in our capital markets advisory group, which focuses on helping both domestic and international companies on achieving compliant access to the U.S. capital markets. Now, the primary focus of my discussion is to really dive into the benefits for international companies specifically who are already public on their home exchange in achieving a cross trade, also referred to as secondary trading, in the US, and how B. Riley can really be a partner in that process through our OTC advisory practice. Now, although there are different paths to achieve cross trades, my focus with companies looking to start their journey is specifically on OTC markets trading platform, whether that's on the OTCQB or the OTCQX. So just to give a little background, for those who may be less familiar with OTC Markets Group's trading platform is an SEC registered alternative trading system and FINRA member broker-dealer. So in order to trade on their platform, you must work with a qualified sponsor, and B. Riley is just that. So as a qualified sponsor, B. Riley works closely with issuers to really navigate the process of obtaining secondary trading on the OTC market, guiding the company through each step of the way. So ultimately, it's with the goal of providing issuers the ability to gain the exposure and visibility in the US, which is the very purpose behind establishing secondary trading.
That's very interesting, Becky. Can you tell us what a company actually has to do to get through the cross-trading process and why B. Riley's role as the OTC sponsor is important for that?
Of course. So, I mean, number one, it's important because OTC requires it. So you have to work with a sponsor to establish trading. But in my opinion, what's even more important is working with a sponsor that can really be by your side each step of the way, so you know what you're doing. I've really turned our role as sponsor into more of a full service advisory relationship around the entire OTC development process from start to finish. So it's really my goal to make sure all companies are first and foremost educated on how the process works and what's needed to make their transition into the US a success. I think many companies wonder, why do this? So why obtain a ticker on the OTC market platform if you're already public in your home country? Now, while some investors in the US can trade directly, say in Canada or in Australia, many US investors may be unwilling or unable to trade and prefer to see quotes in US dollars during the regular trading hours. And this is where I step in. So I really work with the issuer to create their US ticker to give the US investor the best and most efficient way to trade their stock. Now, not only am I acting as sponsor in this advisory capacity, but we can also facilitate the creation of the ticker, which is generally step one for most companies. And this process is starting with the filing of the FINRA 15C211. And this is the market making application. And I complete this on behalf of the issuer to help them create their ticker. Again, for those that don't know what Rule 15C211 is, it regulates how and when a broker-dealer like B. Riley can publish quotes and trade your stock. And once a FINRA 211 clears, the company is issued a US ticker and immediately quoted on the pink market. That's the point where we can really dive deep with OTC markets to finalize their quotation process and get them off the pinks and upgraded to the QB or QX, whichever tier they qualify for. Ultimately, with the sponsor letter being the final step in the process, and that's where I submit that at the very end, and then we officially get them upgraded to the tier that they applied for. So really, all in all, the process takes about 2 months to get through from start to finish, and I'm really there to just be by their side each step of the way, acting as the liaison between them and OTC markets, as well as FINRA. So it's not a difficult process, and I truly believe that being public shouldn't be difficult for companies looking to gain US exposure. And that's why I want to be there to handhold them. And especially with secondary trading, it's only benefiting them to gain that visibility they aim to see in their stock. And as companies continue to grow, and I've completed my role as sponsor, they've truly now established a relationship with a nationally recognized and highly ranked investment bank. So that's really, you know, this from start to finish how the process works. And, you know, I really make it my goal to make it as efficient as possible for them.
Thank you so much, Becky, for walking us through the process. Now, once a company is here trading in the US on the OTC, is there anything else you think is important for them to think about in establishing a successful transition?
Yeah, I mean, there's so many factors that, you know, can make their cross trade, or whether it's a direct listing, whatever it may be, to make it more of a success. But three things that, you know, truly come to mind for me as their advisor, as their sponsor, I want to make sure they're in the best hands possible. And DTC eligibility is always something that comes up. ESG and aftermarket support. I think those are three of the biggest things that I get asked constantly from my clients. And for me, I want to make sure that they know which path they need to take and who to work with. And just to give you a little color, so DTC is how stocks are traded electronically in the US. And I know Erik can actually speak on that, so that'll be great. So maybe Erik, you can touch on what it really means to be DTC eligible. ESG is becoming really important in the US, so making sure you're working with the best ESG providers out there. Great news, Jimmy and Seth are here today, so they can really dive into that and give you, you know, a great detail on what that means. And, you know, one of the most important is aftermarket support, and who better to help you than our friends over at Planet MicroCap. And, you know, I actually have several clients here this week presenting. And this is step one for them, getting in front of the US audience with that aftermarket support. So it's just all three of those aspects are so important in just creating a success when you're looking to get into the US. But bottom line, I love working with all of my clients on this journey, and, you know, I just really hope to remain a partner as they continue to grow in the US.
That was great. Thank you, Becky.
Thank you.
So Becky just mentioned DTC. Erik, I'm going to kick the ball to you. Can you tell us a little bit more about DTC and why it's important for companies listening?
Yeah, so DTC stands for the Depository Trust Clearing Corporation, and it is the largest central securities depository on the planet. It was created by the brokerage industry several decades ago to facilitate the electronic movement of certificates or stock between broker dealers. And basically, prior to the creation of DTC, all trades had to be settled manually with physical certificates. So what DTC eligibility is basically a company has its securities submitted by a clearing firm to be underwritten by DTC or approved for deposit at DTC, so they can be held and entered into street name. And without this, when a trade settles, one broker dealer has to FedEx certificates to another broker dealer or move them through the transfer agent back and forth. And it's a very costly and time-consuming process. And really what it is with aspects of cross-border trading, particularly with stocks out of Canada or some of the other qualified exchanges, is really what allows for the simultaneous and seamless settlement of securities between exchanges. But it's crucial for all securities in the United States that look to trade and be held in broker dealers to be able to be DTC eligible.
Okay, thank you for that. Now, can you share some strategies you've seen companies use to help with the capital raising process once they're here and they're trading?
Well, our work is generally seen, you know, three different methods. You know, the first being a lot of companies will go out and try and do a private placement with friends and family. And those generally, you know, have limits. They're early round. A lot of times they'll bring in an advisor that can help them with a private placement or a Reg A. And then as I like to say, they move up the food chain to where they can get an investment bank that can come in and do an underwritten offering for them. And that involves working with someone like a B. Riley or a smaller shop that is able to, you know, raise them what they need to uplist to an exchange listing. What we think is crucial and important is for the companies that want to be successful in this process, they need to have very good organization that includes a good business plan, financial model, And then they have to have good corporate governance, and they have to have the right team of advisors to be able to keep everything, their books and records straight, so they're all can be easily audited, and the right sort of corporate governance. So if the investment bankers come in and the investors come in to look at these companies, they understand where they're coming from, where they're going, and how they're going to get there, and who's going to help make it get done. And
what are the factors that go into finding an advisor like that?
first of all, you've got to have someone that's a good fit for your personality and how you run your business. You've got to have someone who has demonstrated an interest in your business, in your industry, that understands some of the nuances around it, and also understands how the securities industry works. And then we think, checking references and getting good referrals is one of the key factors in this process.
Okay, thank you. Now, we heard about ESG mentioned a few times now, but I know it's a relatively new area, and I'm sure many of you have heard about it, but if you're anything like me, you might know relatively little about it. Jimmy, can you share with us what exactly is ESG?
Sure, Anna, and thank you for that setup, and thank you, MicroCap, for this forum. So ESG is an acronym which stands for Environmental, Social, and Governance, and these are a new set of considerations and disclosures that are being used by more and more financial stakeholders to evaluate companies. So environmental generally refers to policies and goals around recycling, circular economy, water usage, pollution, biodiversity, and of course, climate change. So climate mitigation. So what's the carbon footprint of your company as an issuer? And adaptation. What's your resilience to climate change and climate change policies? And then social refers to goals and policies relating to social issues and stakeholders other than shareholders. So this issue includes human rights policies, diversity and inclusion policies, labor-related policies, and how you manage your suppliers. And lastly, for governance, as an issuer, you may already be making these disclosures in your quarterly or yearly filings, but governance also covers policies and goals relating to political engagement, anti-corruption, whistleblowing, and executive pay.
Now, Seth, I know you're also involved in ESG. Can you tell us why is ESG important right now?
Yeah, thanks, Anna. Appreciate the question. ESG is there's many reasons why ESG is important, but we believe there's three core areas for ESG, and the three come down to investors, customers, and employees. I'm gonna go through each one. For investors, the reason why ESG is important to investors is one, for raising capital reasons. There are many investors that look at ESG as a way to assess risk. And so when they're looking at companies to invest into or evaluate companies, the ones that have ESG reporting are the ones that can really stand out, are a bit more proactive. And so for certain investors, it really helps their process and it helps them evaluate that risk. So there's a big benefit and why it's important. For institutional investors, there's certain ESG funds that will actually screen out companies that don't have ESG reporting. So again, having that ESG report can help you participate in funds that you may not be able to participate in if you don't have an ESG report. And so that's why it's really important for investors. There's actually a good example that we worked on with a MicroCap mining company that we helped them publish an ESG report, and they were able to raise $30 million from an ESG fund out of Canada because they had that report. And so it was a really big win for the company, and again, why it's important to have ESG reporting. Now for customers, the second reason, a lot of large cap companies, big companies, multinational companies are now requiring down into their supply chains that all of their suppliers are start to measure and report on ESG and sustainability. So if you're a microcap or a small cap company and you sell your product up to a large customer, you may already be receiving questionnaires and questions and requirements about this, or if you haven't, it's likely going to come. So being prepared, being ready with ESG reporting now is very important, because your customers are going to likely either they already are or they will require this into the near future. And so that's another important reason. And so ultimately, having an ESG report can help you retain that business or even win new business. And the third area is employees. There is a lot of research showing that, particularly with younger employees, they want to work for companies that are more purpose-driven and are more transparent related to ESG and sustainability criteria. And so we have a lot of data showing that companies that have ESG-based reporting can do a better job of recruiting and retaining their employees. And so all in all, and there's many other reasons, but all in all, those three areas are why ESG is so important and why it's important to get started on that ESG journey if you haven't already.
Thanks, Seth. So Seth, you mentioned that customers might be asking for these kind of reports. Jimmy, from a legal perspective, are companies required to be making ESG disclosures right now?
So, as Seth said, I think you want to do more than what's required, but there are requirements. Currently, in the United States, there are about 50 mandatory reporting provisions that come from various government agencies such as Department of Education, Occupational Health and Safety Administration, EPA, FDA, Department of Labor, and of course the SEC. So for governance, you're probably already making ESG disclosures regarding corporate transparency. And these are your disclosures in line with Sarbanes-Oxley and Dodd-Frank. But you should also be aware of possible new rules coming from the ESC regarding cybersecurity, as well as climate disclosures as an issuer. And then for investment advisors and investor companies, there are also rules regarding the proposed name rule as well as the advisor rule. And a lot of these new rules are addressing area of litigation around greenwashing, which the SEC has been taking a lot of, has been actually making some actions against and has been paying a lot of attention to in its rulemaking. So you are required currently, but the requirements might also be increasing. So with regards to social, for example, you probably already have HR policies and vendor management policies relating to small businesses, veterans, minorities, and so forth. But as Seth has mentioned, it would be in your interest to be ahead of the game regarding these type of policies and evolving laws and regulations in order to deal with the expectations of other stakeholders, such as your employees and investors and industry practice generally. We're also seeing that internationally, some companies are engaging with other suppliers that have stronger ESG reporting requirements. Therefore, you may be getting questionnaires from companies that are availing themselves to ESG rules in Europe, for example. And in that situation, yes, it wouldn't be mandatory for you, but because you're working with a company in a jurisdiction where it might be mandatory, you would then have to, commercially, have to disclose. And then lastly, with regards to environmental considerations, unless you're involved in mining, energy, or petroleum, there's not too much that you have to do mandatorily. But as I mentioned earlier, the SEC has recently issued proposed rules on climate-related disclosures. And if finalized, they would create a very large greenhouse gas tracking obligation by as soon as 2023 for large accelerated filers. So for environmental tracking and reporting, this is where retaining a team of environmental consultants, such as the ones that PULLP works with, and they would help with heavy lifting, since this is a very industry specific, technical and quantitative area of tracking and reporting.
Okay, so let's say that the disclosures aren't all required right now. Are there still benefits of reporting for businesses proactively?
Sure. I think as a lawyer, I'd say that the first and foremost, you want to be compliant. And as these rules, the existing rules are being litigated by the SEC and new rules are coming through the pipeline, yes, there's that immediate benefit. But alongside with, being competitive in the face of investors that know how special you are, there's rankings and ratings and indexes regarding ESG parameters where you want to make sure that you're putting yourself on the map. And again, just communicating with stakeholders such as customers and employees. ESG sustainability reports are a very useful tool to do so. And then there are other maybe more social goals such as net zero, Paris Agreement, where you might want to signal to those stakeholders that you're in line with them. And then using ESG reporting and goals and targets is a very useful way to do so. And then generally speaking, you want to explain how ESG is playing a role strategically. It isn't just reporting, it's a strategy around how it's being mainstreamed through your business. And I think having that conversation through ESG disclosures is very useful.
Seth, do you have anything to add on that?
Yeah, I think Jimmy did a really good job of talking about the main benefits, but I can, in a way, summarize and add a couple more. But I think that, it's important to note that today, hundreds of companies are reporting on ESG, and every year you're seeing that percent of companies across every type of size of company report. And that's every year it's getting more and more, a much higher percentage each year. But generally the benefits, I would say, going back to our why it's important, the key stakeholders, investors, customers, employees. I mean, the benefits for your investors is that ultimately it'll help you raise money. And I think that it's going to get you in front of incremental institutional investors and certain investors that previously may not have even considered investing into your company. You get in front of a new broad section of retail investors that absolutely care about ESG. And so ultimately, from a capital raising standpoint, really important. Another benefit for customers is that it could potentially open up new business and help you win new business. And from an employee standpoint, you could potentially hire great talent, retain your talent, but probably above all else, it'll help you improve your reputation as a company. And that's so critically important in this highly competitive world that we're in.
Well, thank you for that. Seth, we heard about what you do. Can you tell us how companies can get started with ESG reporting, practically speaking?
Yeah, absolutely. So, Socialsuite was founded on this basis of helping companies, public companies, particularly microcap and small cap organizations, go through that highly complex process of ESG reporting and look to make it simple. And so when you think about getting started as a company, when we hear this a lot in market, where do I start? How do I do this? And so we, generally the framework that we like to talk about is starting with framing that journey. And one thing to remember is that ESG, there's no perfection. It's hard to be perfect. It's always and nobody's perfect. So at the end of the day, it's about keeping it simple, really thinking through and setting clear goals of what you're trying to accomplish, and what stakeholders really matter to you. And those are those first steps in the first phase of that ESG process and getting those basic building blocks down. From there, we always recommend conducting a gap analysis. You know, what's great about ESG and the frameworks within ESG is that as a public company, you already disclose certain factors across a lot of these ESG frameworks, particularly the governance factors. So in many ways, you've already taken those first steps because you already disclose the governance factors in some of the other public disclosures. So went through a gap analysis, you could see what disclosures do you already disclose publicly against a framework and what don't you have disclosed. And so it allows you to have that starting point to then think about and plan out your first part, which is a baseline report of what you are disclosing today. So you have that baseline report completed, and then you can progress. And ESG is all about progression because there are a lot of different factors involved in it. And it's about taking your time, planning out, and ultimately looking to complete that report. And at the end of the day, it's important to choose a partner that can help you and guide you through that process from step one through all the way to reporting.
Thank you, Seth. Thank you so much for contributing to today's panel, to all of you, and providing us with some insight into your various specialties in the industry. But before we conclude, does anyone else have anything they'd like to add after hearing from each other?
I will.
Becky.
No, I think just following what Seth said, I think it's so important to just make sure you have a plan laid out, no matter what area you're in, whether it's ESG, capital raising, working with the right partners, finding your path to the US. You need to be organized, and you need to be working with people you trust, and that can really provide you that area of expertise, which it seems like everybody obviously does here today. So I just think that's huge for any company. Just to work with the right partners, make sure you're educated on what you need to do so you can get through each of these steps as efficiently as possible.
Yeah, maybe I'd add on to that with regards to working with the right partner. So many of these steps that we've discussed today are peculiar to your industry or your business or your circumstances. So I think that's what you should be looking for in the partner. First of all, specific to microcaps, for example, or also having the vision to understand and have insight on your particular challenges, especially when it comes to things that are technical, such as the things we discussed and ESG.
Well, thank you all so much again to our panelists, to those of you who joined us virtually. Thank you, Bobby, Shelley, Lulu, and SNN for having us. And I will kick it over to Bobby to conclude.
For sure. Well, we have a little bit of time left here, so I figured I'd throw a couple questions at you guys. I mean, why not?
Go for it. We're not
So-
live. I wasn't sure they did any improv.
Well, look, for each of the services that you provide, I mean, there's going to be some issuers that are obviously going to be watching this to get some insight, understand how they should approach each of the services that you provide. Maybe we can address some of the frequently asked questions that you've been getting from issuers currently, and maybe we can address them right now. Becky, you want to kick us off there?
Sure. I mean, I think it all goes back to what I said about just picking the right partner. And, for me, like I said, B. Riley, we're a full service investment bank, but I specifically work with companies who want to make that transition onto OTC. I spoke mostly to the international aspect of it. We do work with domestic companies as well who want to trade on the OTC, but, there's such an advantage for these international companies to establish secondary trading in the US and really get exposure that they can add to already. So for example, I'd say 90% of the companies I work with are Canadian. They're already public in Canada. They're trading on the TSX, the CSE, or the NEO. And they want that extra exposure. And so for me, it's making sure that I can help educate these already public companies on how efficient we actually can make that process to cross trade into the US, because I believe that there could be many misconceptions, or it just seems too complicated. But that is why, you know, we've established this practice at B. Riley, is just to make sure that companies know that I can get them through each step of the way, and this is what you need to do. This is what has to be done to have a successful transition into the US. So, you know, to what you said, Bobby, the question is, well, how do I do it? It always like, what goes into it? What are the costs? And, you know, for me, it's just, I always want to educate them first so they understand it, so they can make the right decision and determine, like, is this the right move for me now? So just education is so important. So companies know, you know, how to make that right decision.
And arguably now is, you know, look, at any time, if you're at any point in whatever is going on in the markets, you know, especially if you're looking to raise capital, you want to make sure that you have every tool in your tool shed, right? And you're being able to be exposed to as many possible investors as you possibly can, you know, and that includes being able to have cross trading in the US. And this actually dovetails to a bit of what Erik does as well on the capital raising side. So Erik, I mean, from your perspective, how much does it help when a company also is now cross trading the US from the capital raising perspective?
I think it helps quite a bit. I mean, it opens up the company's securities to a whole new range of investors. Your trading in the United States provides clarity to what the Canadian pricing is. For example, if you're trading on the Canadian markets, it's going to be in Canadian dollars. Where here you're going to see B. Riley quoting a price in US dollars. The same if you're trading on the Australian Stock Exchange, and you're also listing your securities here in the United States as well, or from a European exchange.
And the thing is that, you know, when I bring up this point of that, you want to have every tool in your tool shed and have the possibility to have as many possible investors, you know, be part of that capital raising round, or actually even look at your company. That then also dovetail into ESG, right? With everything that Jimmy is doing, as well as Seth. So maybe you can speak to that as well. Jimmy, let's start with you, and then Seth will come to you.
Sure. To your original question, what are the frequently asked questions? I think from my view, the three timelines, like how timely is this? How much is it going to cost me? And what's my exposure? And I think with regards to timelines, again, I think you want to be ahead of the game. It isn't just so much that you have to do it, but there's a lot going for you if you set yourself apart by doing this exercise, and that you're already partly doing, perhaps. And then with regards to cost, again, the early bird gets the worm. I think a lot of these proposed rules are not in effect yet, but you don't want to be scurrying to try and figure out what is the thing that I should be doing or tracking or implementing. So I think you could manage costs by also staying ahead of the game. And then with regards to liability, which I think is sort of the focus and a specialty of PULLP, we're seeing a lot of greenwashing actions by the SEC going against investors as well as issuers that have not been so precise in their disclosures. So I think with regards to that, you definitely want to work with an expert and make sure that your internal practices are kosher.
Absolutely. Hey, Jimmy, real quick, it's Seth. I'm sorry, I'm going to get to you in a second. I know I'm going to have follow-ups for you too. But Jimmy, real quick, just to quickly follow up, I mean, have issuers had any pushback in terms of like, all right, the rules aren't clear yet, so then why should I engage you right now if it's not clear? Or do you then answer them and say, well, there's enough where if you do engage us, there's some things that we can get the ball rolling on from an ESG perspective?
Yeah, no, I ultimately we're in this ESG moment now because of new rules, but under old rules, there are things that can get you into certain into trouble, essentially. So the SEC has issued guidelines in 2010, making sure that the way that you present what you're doing as a company on the markets is clear and transparent for the operations of the capital markets. There's also the FTC, so you're not saying things that are organic, that shouldn't be organic. USDA, and so forth. So it's actually, there's a lot of activity now that I think you can be future-proofing yourself for whatever the rules end up being.
And this dovetails perfectly into what Seth and Socialsuite are doing right now, right? Where, I mean, you probably have some great perspective here too, Seth, on what, you know, the old rules, implementation of the new rules, and then having the software enable, you know, firms like PULLP and others that are doing ESG work to say, okay, here are all the things. Now here's the check boxes, and here's a great report that now shows whoever is asking, you're within ESG compliance. Do you need to say more? I think I just said it for you.
No, you got it, Bobby. No, I think that, again, you know, as we were chatting earlier about this, ESG can be quite a complex set of tasks. And so, you know, we're there to try to simplify this effort. And so using software and using templates and providing that guidance through a process that allows companies to really report on the right metrics and ultimately provide also a verification layer, so we can, and our team can review the information that companies are disclosing, and ultimately it's again going back to the point of what are the key disclosures you're trying to make, and trying to meet those key stakeholders to create value. And this is all goes back to value, and that's the most important thing.
Very good. All right. Well, I think those are my main ad-libbed questions that I have based on everything that I heard on the panel today. And, I mean, Anna, you close us out. Who am I? I'm just hosting.
I mean, I think the most important thing to remember is, you know, you've started a company, you may be an expert in whatever field that company is all about. You may even know a little bit about capital raising, but it's important to, you know, educate yourself, seek out the right partners, and get ahead of the ball when it comes to being competitive with attracting investors. So thank you all so much. Thank you,
All
Bob.
right.
Thank you.
Final thing.
Bobby.
Absolutely. One final thing. Let's give where everybody can find more information about each of you. Anna, I'll start with you.
That's easy. It's PULLP, PULLP.com.
All right. Erik?
It is coralcapital.com, and that's coralcapital.com.
Nice. Seth?
Yeah, it's socialsuitehq.com, socialsuitehq.com, for more information about our company.
Becky?
I'm going to say you can contact me directly. You can shoot me an email if you have any questions on how the process works. I know we have a lot of international companies here this week, so would love to touch base with anyone if you have questions on how the cross-trade process works, but you can email me at bpopoff@brileyfin.com.
And Jimmy, close us out.
Cheers. Also with Anna at PULLP.com. Send us a message.
All right. Well, thank you all very much for participating in this panel today. It was fantastic, and look forward to seeing you all in person soon.
Absolutely.
All right, thank you.
Thank
Thanks,
you.
Bobby.
Cheers.
Take
Bye-bye.
care.
Thank you, Anna. Thank you, Bob.
Bye.
Bye.